welcome to the Bourse Report. Well, we're at the halfway point of the year, and we're taking a look, of course, at equity markets as well as fixed income markets at this point as usual. And today we're going to focus on the local equity markets and how they would have fared in the first half of 2026. Now, for the first time in several years, local equity markets would have actually produced positive results at the halfway mark. Let's take a look at what has been driving sentiment, performance, etc., and what investors might be able to look forward to in the coming months ahead. Turning firstly again to our first slide, in terms of performance, we can see that again after several years of negative returns in that first half performance. In the first half of 2026, most of the indices and sub-indices, well, in fact, all of them would have reported a very positive performance, with the Trinidad and Tobago Composite Index in that yellowish color up 4.4%, supported by its sub-composite indices or sub-indices. The All Trinidad and Tobago Index in that pinkish color up 4.4%, as well as the cross-listed index up 4.3%. So most of the constituent indices, or all of them in fact, would have shown broad improvement, and the Trinidad and Tobago Composite Index up also that 4.4%, in stark contrast to negative returns over the past few comparable half-year periods. Now, driving that performance for the first half of 2026 with some notable gainers. TTNGL up a whopping 307% over the first half of 2026. Of course, the big news and the big driver for NGL obviously being the resumption of dividend payments, as well as a very special $1 per share dividend, which also is now at the option of investors going forward, or investors in NGL, to be received either in TT dollars or US dollars. So that would have significantly turned investor sentiment and interest in NGL, and leading to that over 300% gain. National Enterprises Limited also up 150% on the heels of a very juicy dividend yield, retroactively as well as prospectively, as well as the prospect of or potential for higher dividends in subsequent periods, given the dislocation in energy markets and the impact that higher energy prices usually has on NEL's financial performance. Deco PLD was also up just over 50%, as well as One Caribbean Media, and NCBFG, after languishing for quite some time, was up 37%. On the heels of not really too much in terms of improved earnings. However, there seems to have been some resurgence in interest in the stock, particularly with its performance on the cross-listed market of Jamaica, which has actually been up on the Jamaican market over 80% year to date. On the other end of things, we can see that CIBC was down just about 7.2%, which is somewhat surprising given the acquisition news or pending acquisition news of CIBC Caribbean by Butterfield, which is expected to take place sometime in the first half of 2027, with the regulatory approvals coming into play. Prestige Holdings down 11%, Angostura, ES Bridens, and LGWB also down between 20 to 30% on the heels of somewhat lukewarm performance in terms of financial reporting, or the most recent financial reporting. In terms of overall activity, however, we can see that accompanying that increase in valuations overall of around 4.4% was a resurgence in traded volume and value. Traded volumes over the comparable periods actually up just over 25%, from just under 44 million shares in that first half period of 2025 to 55 million shares, with traded values actually improving a whopping 54%, from 351 odd million in that first half of 2025 to 541 million TT dollars, or TT dollar equivalent, in that first half of 2026. So certainly that increase in pricing accompanied by fairly significant improvement in traded interest as well, whether you measure it by volume or value. Now, what's driving all of this performance, as we mentioned? Well, one of the major factors that is contributing has been supposedly a floor level in terms of valuations, as well as very attractive dividend yields on a relative and historical basis. When we take a look at some of the major companies that are listed on the Trinidad and Tobago Stock Exchange and their dividend yields that are on offer, we can see that investors could invest in fairly reliable securities with improving or very stable financial performance and realize a very attractive dividend yield on the equity investments, with Massey, for example, trading at a 5.1% dividend yield as we move across the spectrum. Republic Financial Holdings at a 5.6% dividend yield. Guardian Holdings at 6.1%. Some of the other banks, such as First Citizens Group, as well as Scotiabank, at a 6.6% dividend yield. And NGL, as mentioned, on the current 12-month basis at a 9.3% dividend yield. Of course, take that with a grain of salt, that is inclusive of a special dividend, and that may moderate over time. Now, when we put that into context for an investment portfolio from one end of the spectrum to the next, we can see that an investor over a 5-year period who would have invested $100,000 in terms of the income earned, and so this one goes out to the income-oriented investors, in income mutual funds at 3%, for example, would earn just about $15,000 in interest. In repurchase agreements or similar fixed deposits would earn over that 5-year period just about $20,000 on a $100,000 investment. In bonds over a 5-year period, earning a return of 5% would earn just about $25,000. And of course, in that portfolio of dividend-paying equities, at an average yield or dividend yield of around 6.5%, would earn $32,500 in income over that 5-year period. Now, of course, unlike income funds, repos, and bonds, dividend-paying equities or equity investments do come with a measure of market risk and market fluctuations. Of course, you don't know when you're exiting whether your prices will be higher or lower, but with that turnaround, was apparent turnaround in equity valuations, and that modest improvement year over year for that first period of 2026, it does provide some increased measure or enhanced degree of confidence for investors who are looking at the equity market and keeping an eye on the very attractive dividend yields that are on offer. So overall, are local stocks attractive? Well, from a valuation perspective, again, both from historical norms and relative levels, they do appear more attractive from a price earnings basis. Dividend yield certainly would be on the more attractive end of things, particularly if you are constructing a portfolio of very reliable dividend-paying stocks. Again, that could range anywhere between 6 to 6.5% based on how you construct your portfolio. Of course, many of these blue chip companies offer investors built-in diversification, with diversification both in terms of industry as well as geography. So not just focus on the Trinidad and Tobago jurisdiction, but across the region. And macroeconomic conditions will continue to be somewhat tepid, but there is some degree of cautious optimism for the Trinidad and Tobago economy at this particular point in time, given recent or relatively recent energy developments. So again, overall, the stock market the local stock market rather, appears to be at this particular point in time a bit more attractive, notwithstanding the usual risks that come with equity investing. So if you'd like to find out more about whether investing in the local equity is right for you, can give us a call at 226-8773 or to Bourse, email us at info@boursefinancial.com. And of course, you can check out our website, bourseinvestment.com, where all of our research is absolutely free. And you can catch this article on the business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.